Morning, I'm Darryl Jones, Director of Research at Hedgeye. Welcome to the Macro Show for April 26, 2021. Busy week, FOMC meeting Tuesday and Wednesday, lots of economic data. Keith and I are still recovering our voices from coaching all weekend, but we will get into it.
We will get into it, and we do lose the voices a little bit, but we can still put it on. We can put it on. Congrats to both our 2009 and 2010 CJR Connecticut Junior Rangers teams for both making it to the finals in Smashville at the Brick Series tournament. A job well done by all the kids and all the coaches indeed. Top three things this morning in my notebook this morning. Going to hit on the dollar, number one. Number two, hit on commodities, which is the upside down of that. And then hit on the Russell. All these things, I mean, you get these opportunities. I don't know how many more you're going to get. I don't know how many more opportunities you're going to get to buy Bitcoin or the Russell, but we'll have to see, or your favorite small caps, or to short the dollar. I mean, point number one, let's look at this thing. Okay, so 3-4 weeks ago, I think I got a lot of emails from people that wherever they came from, Nashville or Memphis or whatever. Oh, the dollar's breaking out. That doesn't look like a breakout to me, Jonesy. That looks like a team that didn't make the quarterfinals. That looks terrible. That's not good, right? That's not good. 3 straight down weeks for the dollar after it got above some trivial moving monkey. And again, we don't want to be linear chartists. We want to be fractal in our orientation. We want to measure and map. We want to get it right? So at the end of the day, getting the quad right and getting the signal right together has kept you on the right side of that dollar. Again, the dollar also is a consensus net short position still in yen terms and in Swiss franc terms. So if you look at that on the points of the day today, we'll get to the point on the Russell, which is in the top here shortly. But again, really there's nothing out there where people are consensus bulls. That's been the case all year long. They got too bullish maybe on lean hogs at one point, but at the end of the day, people are too bearish, and you already know that. Point number two is the inverse of the dollar, which is, of course, commodities. So a new cycle high for the CRB index. The CRB index, of course, the equivalent of the S&P 500 if you're an indexer to commodities. So again, big asset class. We're not always long it, but we got long it. Not where that chart starts. That's back in June. Or back in November, rather, where the chart starts. We got bullish on it back in June. So again, you just want to be bullish on quad 2 or quad 3 to be long of course, the commodities. So the commodities work in both because you have inflation accelerating in both. And again, it was a new cycle high, up 1.5% on the week. That's with the S&P kind of flat, albeit right near its all-time high. So again, commodities have been wonderful. And again, as you can see on the correlation table, they're singing the song on the 15-day and the 30-day, which is the immediate term trade. And there's been a lot of intensity associated with that. That's been a big thing that we've continued to reiterate. Look at copper this morning. Look at corn. I mean, look at these charts. Holy hyena. Now, those are championship charts. Look at that. Gen run on the switch. Yeah. Look, that's awesome. Imagine you're yelling like that when kids score. I actually don't yell like that at all when we score. I just kind of go for a walk. Stress down, and stress comes down a little bit. But these are big things, right? Big things. There's of course no inflation in any of those charts, and there would be once we get back to new cycle highs on the 10-year yield or the long end of the curve, there would be no reason for any of that, right? When CPI spikes next month, or when the narrative goes back to where it's been, when you have these consolidation signals. Those were consolidating. Remember when people were saying the dollar was breaking out 3 to 4 weeks ago and corn and copper were breaking down? Terrible. You should not be paying attention to anyone who told you to do that. Absolutely not. Point number 3 this morning, the Russell. Russell. Yeah. It's Keith Russell McCullough. Did you know that? Yeah. Russell. So again, Russell 2000 is what we're talking about here. Now go back to that CFTC futures and options position. Notwithstanding that it wasn't a call that we made, we're just executed on the process. We don't make calls. We execute on the process. Now look at this beautiful thing, Jonesy Buds. That is the biggest net short position in all of macro. Right at the bottom. It's like, I don't know, it's like the worst coach in the Federal League. Right at the bottom. He makes the wrong move. Terrible. Look at that. Minus 1.9 something? That's awful, okay? So again, right where Russell volatility was at the top end of its range, and the Russell itself was at the low end of the range. Now, the Russell's not my favorite long position. We got plenty of stocks that we like more than the Russell because we have a research team, right? So again, lots of ideas at the low end of the range. I think I hit the button 20 times on longs. We're down to 17 here this morning in real-time alerts. But again, it's not a portfolio. It's a bunch of ideas. A lot of small mid-cap ideas were for sale. Now they're not. Certainly not as good of a price that you could have had when people were dogpiling the index on the short side. And that's what people do. They freak out. They sell low. They chase high. Don't do that. Those are your top three things, all right? Now, I woke up this morning after sleeping about 4 hours because I just get too excited to get back on the switch. It was maybe 5 hours. And I started reading, just reminding myself about exponential functions. What were you doing? Huh? How about that? Some of the parents are like, after a hockey tournament in Nashville, it's going to be a tough day on Monday. I'm not going to have a tough day. No. We're going to talk about the exponential functions that are all budding up there, right there in your notebooks, okay? So again, big difference between how people model things deterministically. We model things stochastically. We pick up on exponential functions, things that go up slowly then all at once. That's what exponential means. So again, pay attention to that. And don't just use a base rate on exponents of 10 because you have 10 fingers. That's actually where it came from. Great point by Strogatz. So again, Strogatz is a great professor at Cornell of math. For those of you that want to be more mathematically inclined, I don't think you need to understand every single equation. I think you need to know how to apply them. Okay? I think you need to know how to apply them. That's one way to keep teaching that or coaching that. I think that should go over pretty well with the team and everybody else is trying to get. By the way, we have I think today's free. So welcome. Whether you love me or loathe me, doesn't matter to me. Water off a mucker's back, right? It's Keith Russell McCullough, right? So put it right there and do whatever you want to do with it. And let's just get on with our day. So what we do every morning, top 3 things. That's a summary of all the work that the team does. We have a great team, obviously. Then, calling out the top 3 things that are jumping off the page in the notebook. Then we get into the notebook and we go down the line. Just like playing your full bench. If you're a good coach, you can play your full bench because you coach the players that can come up. It's easy to coach great players, right? Harder to develop players. That's why Connecticut Junior Rangers are where it's at, right? S&P 500, 4112. See that? Right there, sitting right there. That's a big high or low, okay, for the cycle. And you know where I'm going with this one. I got a lot of feedback on this one in Nashville. We had some people, some fans of the Jonesy Buds. J Bud's all-time highs, right? I actually put it ahead of the all-time high this time. See how I did that? See that? J Bud's at the all-time highs. Now, we would actually be at our all-time high if we didn't lose in overtime in the 2010 game. But, this is more about this market. This is amazing, right? There's more downside than upside after the move. Look at the move, yes, on Friday. Look at this. Look at the bongo board. Everything was up other than the 2 sectors I'm not long, or at least I'm not long every sector. But again, we got 6 horsemen. 2 of the horsemen are not staples and utilities. And somebody's like sitting in the queue whining about why utilities are bullish trend. Well, that's even better. That means I wasn't short them, the whole way up. When it went bullish trend, maybe I'll short it again at the top end of the range. I can do that. I can do whatever I want to do, right? But again, that was a quad 2 day, okay? That was a quad 2 day on Friday. Now, if you look at the market the way we look at it, not simple moving averages. That's just ridiculous, right? Put yourself back in the 1990s, pre-internet, if that's what you do. And if you're triggered by it and you're never subscribed, you're on the other side. You're the other team. We like that. We like that. And I love our subscribers, by the way, they know this. But I really like people that do moving monkeys because you got to have somebody to play against, right? You got to have somebody to play against. You can win some of these games. I think we won the quarterfinal 8-1. You had to play somebody. Doesn't mean that they're good, right? So again, that's what we want. Look at the volume. So we look at price, volume, and volatility. We don't stare at moving averages. Imagine you looked at a simple moving average. Imagine that was what you do. When you cite markets, you look at that. You are looking at absolutely nothing that matters in the modern era. Now, these 2 numbers, plus 21 and plus 12, those are awesome, right? So you get which we walked through last week and the week before that, and the 5 years before that, and the 5 years before that, 13 years, and I learned it for the 8 years prior to that. It's about the relationship of price, volume, and volatility. Then I put it in a model. Right? That's ours, that nobody can steal. Don't steal other people's models. That's not good. Okay? So again, this one, I saw some guy doing some risk range thing on Twitter. We're going to have a little chat. By the way, you'll have a chat with somebody else. But at the end of the day, this is really good. This is really powerful, right? Volume is accelerating when volatility is breaking down. The VIX went out at 1733, and the low end of the range is towards 15. And most importantly, I can't get it even above 19 today. So again, that's the thing. Volatility continues to break down into the investable bucket, or what we call the bulls bucket. Okay? So again, if you don't know what that means, you got to go back and watch some Hedgeye replay and understand there are 3 buckets of volatility, 3 regimes of volatility. The really bad bucket where people die, the chop bucket where you're coming back, and then the investable bucket where a certified monkey can make money, like me. Okay, so that's what we want to be doing. We want to be investing in that bucket. Okay, paying attention to that. The Russell RVX went out at 25 on Friday, Jonesy. Right? 25, not 35. Trend's like 33. And I have it going towards 21. Now that would be a sight to see. That most logically would get the Russell back to its all-time high. We'll have to see about that. That would be another 4% higher from where it closed. It's the only index, major index, by the way, that's not at its all-time high when you look at the S&P, the NASDAQ, and the Russell, the three together. What else we got going on for you? You already flashed it because you're getting ahead of me. You're front-running me there, Genron. If you ever try to front-run the quads, Genron's front-running the charts. You know, there it is. Implied vol after that one. Nothing changed on that one. There it is. There it is. So on that one, you have XLI, 38% implied vol premium. You have basic materials, 33% implied vol premium. Even the SPYs have a 14% implied vol premium. So we're back in the game, baby. We're back. Just like tying it up. Right? We're down 2-0 against Minnesota going into the third period, and they're like one of the best teams I've seen at the 2010 birth level. We came back. We tied it. 2-2. We're back in the game. Now they're hearing the footsteps, right? Now, there. Now, the bears, when you have implied vol premiums, they're hearing the footsteps. They're hearing the footsteps. And it's the thing about bears. I grew up with them in Thunder Bay, Ontario. The bears know. They know what a gun is. We have these things called bear bangers. Bear bangers are like a fake shotgun because it sounds like one. They know. So my wife, when she goes on long runs, she has a bear banger, right? So again, you be careful, bears, because when you hear the footsteps, that means we're coming for you. Coming for you. But it's after it's already started to work. So you're on the run, you know you're against the ropes, you got nothing. Look at, what if your catalyst was new home sales? What a great call that would have been, Bears. Look at the Bears. Pop that up. We didn't play it. There's no hockey team called the Bears, is it? Actually, there's the Smith Fall Bears back in my junior league. Then they created one of the world's greatest cannabis plants.
I guess the Bruins are technically Bears, right?
Oh, actually, we lost to the Bruins, so there you go. So they had a day. They're the ones who came back against us and beat us over them. Anyway, did you see that chart one more time while I was ranting? 66.8% growth. Like, what the heck? We got this guy, Mike, who's running around saying, oh, it's a mid-cycle slowdown. Mid-cycle, what? That's called peak cycle, right? That's going to the peak. And if you don't get the peak timing right, Mike, we got employment at the cycle lows, Mike. We got inventory at the cycle lows, and then we got housing at the cycle peak. The only thing I can't find is anything in the middle. Anyway, let's keep going here. I slipped that in there. You saw that. What else we got going on here? We do have China on the short side. China is our only major equity market short, and it was down 1% last night, so I was satisfied when I woke up in the middle of the night. Couldn't sleep. There it is, down 1%. That's what you want your shorts to do. We're short the dollar and China. Look at those two charts. They have the color indicates the direction. Not good, bears, not good, okay? Now, bears, not good, bulls. Bears, good. Bears, Bruins, good. Nice job, Bruins. All right, what else we got going on? I knew I was going to get it together eventually. Taiwan on the other side of that, which we like. Now, some of you are along the ETF Pro product. We have stuff like the EWJ, which is Japan, the EWN, which is the Netherlands, i.e. the Dutch. Yes, an Irish guy will be bullish on the Dutch. Orange. Then we have the Taiwan. Now, Taiwan, look at this. Wait on it. The Taiwan last week, okay, EWT. Actually, on the week, let's not do the week. Let's just do what it did overnight. Up 1.6%. So it's up 1.6%, equals plus 7.7% in the last 1 month. That's Taiwan. That's very close to China. China sucks compared to Taiwan right now, right? So at the emerging market level, it's really important to model each company independently, country like a company independently. So once you get to that, slide 23, guys, you can see that Taiwan is one of the many places you could be long. And we've been long that for a long time in ETF Pro. So you go to the column there on the Q2, and you're going to find that the China one is yellow. So that's a 3, whereas the Taiwan is green. It's nice. I like that. It's nice, like a good breakout pass. Heads up. Okay, Kospi. How about Dr. Kospi? Now, when both doctors are in the building, go to the other one, Dr. Copper. Dr. Copper, Dr. Cosby. Why do we call them doctors? Well, because they're called leading indicators, Shaggy. Yeah. Even Mucker could do it. I don't know what's going on, guys. You guys trying to get these cords on the floor here? We got a little something. Not the day that I just FYI, if you saw me lose my footing, it's okay. I'm going to be okay. What else we got going on? What we got going on this morning in Europe? Again, continue to buy the damn dips in Europe. Last week you had a moderate dip. So again, you had a moderate dip bigger than a moderate dip in the Russell, bigger than a moderate dip in the Bitcoin because they have higher volatility than the Euro Stock 600, something like the DAX, something like Switzerland. We like those too. I already mentioned the Dutch, EWN. So on corrections, we'd like that, but you don't really get paid on many of them because they keep going back up. So this morning, Spain's back up, Finland's back up. Look at that beautiful tweet I had on Finland. Nice blue and white flag there. Beautiful. People really do like that flag, and people do like it. The spring in Finland is a good time, right, Genron? You got that one in there? Oh, yeah, he's got that one. That's nice. Really nice. A little Yale blue in there. All right, what else we got going on for you this morning? Gold's doing absolutely nothing. So, in the face of all this, can you imagine the alternative to being long corn and copper is just like you're still long gold? That's terrible. In 3 months, it's down 4.5%. Year to date, if that's what you do, you're down 7%. Down, right? It's terrible. If we look at what's going on in things like corn this year is up 32%. So why is it that you love gold more than you like corn, for those of you that are permanently bullish on gold and can't handle me saying this? I don't know. At some point, I'll be short corn and long gold. The only things to be concerned about there is that they have the same color. Maybe I don't know. I don't know what else you would say or do with that. Anyway, that's gold this morning. The update there: immediate term downside to 17.16, and yes, I am still short of it. What else we got? 10-year yield. The risk range is narrowed, 153 to 172. Therefore, I think it's going towards 172. Could happen today. Could happen tomorrow. What's interesting too is that the Italian 10-year yield is up a bunch of more. Or in the last month, really, it's up 19 basis points. That's a lot, because when you have a 10-year yield in a country like this, which equals plus 0.80%, which is where it is this morning, and you go to, actually we don't have Italy on here, but that's up a lot. That's plus 19 basis points in the last month. So this is what we want to be calculating in Nashville or in Westport, Connecticut. So again, these are just things, rates of change, measure and map them daily, weekly, monthly, 3-month, and then more. That's how we do it. Call them trades, trends, and tails. Slide 9 in the current macro deck. You guys can see that's part of our process, it's part of our language. It's also on Mondays, we write the early look, it's called Macro Mondays, where we contextualize everything that moved in global macro last week within the context of the economic cycle and the Hedgeye trade and trend signals. So just FYI on that. And a good spot to take some questions.
Okay, number one question here, John from Winter Garden, Florida. Excuse me. Commodities going up all around except for oil lately.
Oh, oil's down. I forgot to mention that. But maybe
down again today. Low end of the risk range with bullish trend for several weeks now. Same as Russell a week or so ago. Thanks for all you do. More of a comment. I think I'm going to ask the second one too, because it's also oil and we can put it all together.
Yeah, for those of you that don't know, our subscribers, they always ask about what's not working that day. Those are the top questions all the time.
How does this morning's volatility affect the risk range in WTI crude oil? Not worried about the why. Damn OPEC.
Well, you did
just asking about the rescaled range before adding here. So I guess
thoughts
on oil.
Yeah, you should be able to calculate that on your own. Sounds like it's a power user, because not somebody who's watching for free. And thanks for joining us, because you used the words rescaled range. So when you have a rescaled range process, for those of you that haven't studied Benoit Mandelbrot, you of course will get some hints onto how I constructed this or how I thought about it. And you don't get the keys to the castle, but you do get to write it down. So what you would have noticed today is that the risk range on WTI narrowed, right? The bottom end of the range came up, and the top end of the range is still towards 65, 64.61. Oil volatility, which you can look up on your own, OVX, is at 38. So again, it's still bullish trend, because the volatility signal is. Volatility signal would have to get above 44 and change. That's what would shake me out. Don't forget that we've had multiple opportunities to buy gold or to buy oil when it's at the low end of the range. So again, last time it was at the low end of the range, it shot to 64. Then you sell some, right? So that's the way you do it. You don't wake up in the morning, oh my God, look at this, I'm not long that. Why aren't you long, by the way, why aren't you long corn, copper, and oil, right? That's what a portfolio should look like. Now, if you're just picking one because you just do oil, I get it. I get you. I hear you. I love you. Don't forget, I'm trying to make you better. But at the end of the day, you're going to do better over time if you don't just anchor on SPYs and oil and gold or something like that. You can spread your bets out. Annie Duke has done a great job helping us, or helping me communicate why it is that I do that. But again, oil when it's down, why don't you sell a little copper? We call it feeding the ducks. Where's our old mug here? You guys got it? Oh yeah, I heard it. So this thing here, so you see this? See this? See that? You see these? Yeah. So this is what you do. Today you wake up and you got some corn and some copper in the portfolio, or some Freeport Mac brand, which is great, and you just feed the ducks over there. You take the gains and you go buy some oil when it's at the low end of the range. It's not quite at the low end of the range, so it's not a perfect spot, but that's how I think about that.
Okay. Number three. First two are on oil. From David. Bullish XLU and early look risk ranges on an ETF Pro you're short. Not impossible, but would think highly unlikely. Your insights greatly appreciated. Thanks very much.
Yeah, ETF Pro we only update it once a month. So, if you pay more for it, like you're paying for this, then you get the daily update. So you're a big boy, big girl. You can hear, you can write it down. Somebody was saying to me the other day, like, why isn't Playboy in the Investing Ideas product? $30 a month. $30 a month, you'd be lucky to be able to go to the Nashville Brick Series or wherever. It's not a lot, right? So help us out, help us help our team, feed our families too. If you subscribe to everything, including the macro show, then every morning you can get that, right? You heard when I said, hey, it went bullish trend, I'm not shorting it. I didn't have to go change it in ETF Pro, or then I have to charge a little bit more for that, right? Or a lot more, right? So again, good observation. There's no gotcha. It's just a monthly product, right?
Okay, this is number 4 question. Selling on trend breaks. We've heard you detail how you buy repeatedly at the low end of the range in increments in an uptrend, but how do you sell? All at once, 2 to 3 days of confirmation, or in increments with some sell and bounces if you get them? Do you adjust that per the volatility? So I guess I'm trying to think of an example. Maybe, I don't know if cannabis is a good example or not, but something that like breaks really quickly, right? For whatever reason. Maybe it's bad earnings.
Yeah, if it breaks really, there's a couple points there. I mean, there's no 100% rule. It's kind of like saying when you get a breakaway, what do you do?
That's true. Well, you value. First thing is you look at what the goalies do.
Yeah, let's do that. There you go, Jonesy. You're on it this morning. Here we go. Let's do it a little hockey style. And again, I challenge you to think outside of the whatever box. I know everybody wants a beautiful Tiffany box, or they used to. My generation did. It's beautiful. Nice little baby blue box, usually from something really expensive inside. Yeah, there's nothing dynamic about that box. It doesn't move, right? The box doesn't move. So the thing about markets is that they move, like the goalie, right? Well, what if you have a breakaway and the goalie just falls down? Are you going to shoot it low or high? Right? Okay, so let's do this. So if we have something that is bullish trend, like MSOS was bullish trend. So MSOS is bullish trend, so you're buying it and you keep buying it like a boss, you keep making a bunch of money. By the way, when you keep making too much money over time, eventually you're going to lose some money. That's the way the game goes. So let's say this thing breaks, number 1, breaks under trend. But 2, let's make this AB. A, B. But 2 is at the low end of the range, low end of the risk range. Okay, he got a breakaway. The goalie fell, quite literally, came out and fell, right? So he broke down, but he's down. You want to shoot it low, right at his head, and it's just sitting right there? Is he going to save it with his head? Or he can get the puck up. So if it's at the low end of the range, I'm not going to sell that day. I wait for the bounce, right? Wait for put the puck in the net. Goalie will eventually get up. He's got to start over, right? So that's it's going to be a dynamic answer all the time. But what I'm really focused on is, why is this breaking down on a trend basis? No, that's not what I'm really focused on. He's got his own issues, that goalie, right? I got my own issues too. I just got to play my game. So again, I don't focus so much on why. It's when. If it's breaking trend and it's not below the range, I'll sell it more aggressively, right? If it broke trend and it bounces big time, I'll sell it all, right? So there was basically, it's just like, again, shoot at top corner, actually bottom right corner on most goalies if they're left-handed glove. That's a great spot to shoot. If you shoot up most of the time, what you do is that as soon as the trend breaks and there's fundamental reason for it, what you'll see that happen, actually I do that in the Investing Ideas product every weekend. I go through every single idea. If it breaks trade and trend, I send you a note that says we're out. Stop out. That's called a stop, okay? So it broke trend, and that's just, that's one thing to do. But panicking at the low end of the range is not what you want to do.
Okay, this is Greg in Portland. Good morning and welcome back. The team was great, but there's no substitute for Keith. Of course, a question on Bitcoin, or actually, I don't know if he did this on purpose, but he's calling it Botcoin, which is kind of funny.
Good.
Does it have an analogous I-vol range to the 2030 chop bucket for the VIX?
Oh, well, that's to be determined. Yeah. We need more time and space with that puppy. So again, I'm not sure on that one yet, and it's not because it's like qualitatively I'm unsure or sure. It's just that I need a longer time series. So the problem with, I don't know what the date was, but it wasn't that long ago, when Bitcoin started trading futures and options contracts. So you don't really have multi-cycle, long-term time series, multi-year, multi-decade in the case of some markets, multi-decade, right? So it's kind of harkens back to the moments of Mandelbrot, right? If you've read Mess Behavior of Markets, he started with commodities. He started like modeling, trying to model, and figured out that a lot of the modeling was useless because it was Brownian motion. Look it up. Yeah. So he's modeling cotton, corn, stuff like that. Because the time series for commodity prices were as far back as he could find. The survivorship of stocks, for example, isn't, because they get bought, they get taken out, they go. Some are frauds. So again, Bitcoin is very young, and when something's that young, think about your kids, right? A little bit more vol, right? A little bit more volatility in the behavior. Then maybe actually some kids, as they get older, they never grow up, and then they got some volatile behavior at other points in time. But you get it, right? It's still young, volatile behavior, and I don't have the same buckets. I'm getting closer to it, though. It's a good question.
Okay. Yeah.
What I do have is trend.
Yeah.
I have trade and trend levels of vol, which is another way to think about the buckets. Tail risk is the bad bucket. Trend, if it's bullish, and it's in the right bucket, then it's investable. If it's trend bullish, but it's got a little bit more vol, it's going to be in the chop bucket.
Yeah, we actually had another question about our plans on, I guess, crypto research. And one thing that is going to be coming shortly, we found some very unique data that we're going to be rolling into the morning crypto note. We're just kind of looking at the predictability of it. It's actually an interesting market because it's a lot more opaque in terms of data, and we think we found some unique data sets for that. So stay tuned for that. Bear with me for a second here. Okay. So question on DXY. This is from Baffy in France. What are the consequences of DXY hitting 85? Just want to know your take on the low dollar effect on global markets. Thanks. Thank you, KM and Godspeed.
I'm not sure what 85, hitting 85 what?
I guess on the DXY.
If it were to go to 85,
yeah,
that'd be really bad. I mean, today it's at 90.76.
So I guess he's basically asking implications of a really weak dollar.
Yeah, let's go to slide. We actually use it as chart.
Or maybe it's a she.
Chart of the day. Maybe it's in there. We got to wipe off some of the fog here. Maybe that. No, it's not in there. But that's a broad trade weighted dollar. But I want to talk about this for a bit. What was the gentleman's name? Can you show that chart so I can draw on it?
Baffy. Could be a woman. We don't know for sure.
You give me that chart one more time. 48. There you go. Thank you. Can I write on that? Yeah. Just tap on it. A little tap tap. Backdoor tap in. Those are the best kind of goals. All right, let's go. All right, so this is a real important thing. Now, whether this is the equivalent, you could anything lower than 90, 91, where the dollar currently is, would be closer to 85. So good question. Now, what's really interesting about this, and this drives the people that have been calling for the dollar's demise every year since they wrote the book about it, when the dollar was at a 40-year low in 2011, it drives them crazy, right? Because they don't understand that the dollar goes up in Quad 4. Let's just start with that. But if you don't have Quad 4, and the U.S. government is printing money, and now moreover spending it, printing, hitting the control, spend, print together thing, treasuries and Fed, what happens is if you invert the trade deficit, what we did was we took the deficit here and we inverted it. So when it's inverted, now it's straight down because the deficit has gone straight up. Now what you're going to find here is the trade-weighted dollar with an 8-quarter lag follows the deficit. See that? See? Look at this. See, this is the dollar. This thing goes like this. This thing goes like this. Now it ends up down here. Now this thing's gone way down here and the dollar's here. How about this one? This thing's gone here. Eventually the dollar went here. It's called a correlation, bud. Yeah. Now there will be points in time where you can get shaken out of that. But provided that we stay in quad 2, and this is what's very dangerous about quad 2 for dollar bulls. I have no idea why you'd be bullish on the dollar unless we're in quad 4. The dollar is clearly something that people are short of when you're in a liquidity crisis. All right? It's also something that a lot of people have their denominated debt in. We know. But you know of all these people that you pay for, like, they just have one of those topics. They don't have a process, right? This thing, dollar be damned. The dollar last week against the Sri Lankan rupee, get this, was down, right? The Sri Lankan rupee is up over 2% in the last month alone against the dollar. Sri Lankan rupee, okay? What's going on here isn't a free lunch for everybody. What means, methinks, is that your lunch is going to cost more in dollars. Yeah, the corn goes into the lunch sometimes. The wheat definitely does, right? The soy, last week soy was up 6.6%. On your game, mucker, given what you did this weekend. Look at that. Look at that. Soy 6.6% last week, up 17% in 3 months. Hogs, yeah, if you had some bacon with those eggs. In the last three, they're up another 4% last week, up 22% in the last 3 months. Everything in dollars is going up in price because the promise is that we're just going to control print dollars. So really, this is why we made this the chart of the day today. And this is really where the dollar bulls got it dead wrong. They had the economic quad wrong, first of all, and then second of all, they probably didn't realize that this was going on.
All right, everybody. Thanks for tuning in today. We're going to wrap it up there. Back at it tomorrow morning at 9 a.m. And I think maybe we'll do a real-time alerts live this week. What do you think?
Yeah.
We're back both in the office all week, and that's where we go through for 30 minutes, just tickers and ideas. So it's usually a very interesting and informative session. So we'll try to do that this week. Stay tuned. Have a good day out there.